Hi everyone, how are you doing? It's an exciting day, FOMC. So tonight the Fed will release its economic projections and of course how they will update on their interest rate. As you know by now, the Fed's notules are the most important. Like we had last week on NFP, it moved the market. So tonight we expect high volatility to come. On the fundamental side, the economics are reopening, especially in the United States and in Europe, but we see already that the activity is not attracting as it should be, like we see in South Korea and even in China. Because the numbers coming from those regions are hopeful, but it's not as expected it should be. Despite of all the negativity, the pandemic still spreading, over 7,200,000 people infected globally, and now 410,000 people unfortunately deceased by this virus. There are more than 10 or even more dozen of vaccines on the way in the speed of light, but all the tests just show some improvement. So we don't expect to have a vaccine before the end of the year. So if we don't have that by then, we are still in a danger zone. And this is exactly what today in the report of the OECD, the Organization for Economic Development and Recovery, suggested that we will see the worst pace, how do you call that, recuperation of the economics. So they foresee that it will go really slowly. So not the V recovery what we have saw and seen during the stock rally, mainly funded by central bankers' money and the retail traders. They have poured like $21 trillion in the economy just to move it up. And on that result, the risk has returned. As you can see that the dollar has retraced, pulled back to a critical area, and let's see what it will do from there on. Nevertheless, gold is still on a high level, stable above the 1700. And we just see what will happen next. All the riots and the peaceful protests due to Black Lives Matter of the disease of George Floyd has also had some impact. And we will see soon enough if we will have an integration with the real economy, yes or no. By now what we see that the Nasdaq has made new highs, S&P 500 the same, many European stock markets has recovered as well, like the Dow Jones. But as always, what goes up must come down. Especially if you know that there are still millions of people unemployed and that the projections are that corporates are cutting off over 20 to 30% of their employees. And the job listings have never been that low as ever before. So, having said that, take good care of your portfolio, pick out the winners, learn about the fundamentals, and stay tuned. Be safe. Bye-bye.